Good morning, good afternoon, good evening, depending on the time you're watching this video. Welcome again to the channel. So yesterday I did an introduction on the model that I used to kill these markets. I introduced both the bullish and the bearish versions of the model. And I gave out an example of a bearish market. I remember it was on NZD, New Zealand, US dollar. Now, if you've not watched that video, you can check it out for your own benefit before you come watch this one. Today, I want to give an example of a bearish scenario version, bearish version of the setup of the model. And just right before you guys is a chart for NZD US dollar. 4-hour time frame, as you can see right here. Let me just open something else, and you at least you can move with me when I'm putting more discussion. Okay. So this is it. This is the chart. This is New Zealand United dollar, 4-hour time frame. It was published on September, as you can see right here. It was published on September. It was published on September, right here, September 29th, 2023. Yes, this is what we are going to see. First things first, because I'm teaching, I'm going to draw the model first. This was downloaded with, this is the model. This is the model. This one here is the model. And this one here is the model. This was done. Okay, well, maybe you can have a bigger version of it. Just let's have the bigger version of it, okay? So that you can see it very well. Yes, you say this is a protected high. This one right here. So I'm not gonna repeat what I said on the last video. If you've not watched, then you can go watch the video, because today is just an example. I'm just gonna show you these markings here, what they mean for this market. Right? We said we have a sweep of liquidity. I'm just gonna paraphrase. Have a sweep of liquidity. First leg, swing high, break of structure, first break of structure. Then this market comes back and sweep this endorsement for the first break of structure, lower low. Then boom, we ride the market. We ride the market. This one right here is our target here. Is our target. Eventually, the market will take this high. So in this example, let's see. Right here we have a sweep of liquidity. We got here the first break of structure, which left this lower low here, which we came. Did we sweep it or we barely swept it? Now you can go to the lower time frame and confirm that we swept this one, and boom, we lost. This is a target from here. Okay, so this one here, this break of structure here, the first break of structure. Okay, let's begin here. This one right here, this sweep of liquidity here is this one. Say this protected high, this guy here, right? We went up, first leg, break of structure here, this is here, right? This one here, this one here, this lower low, this one here, we swept it. Then riding this part is here when you rode up to this place. This is a target. This place here, let's see. We're supposed to sweep this one, but it didn't. So this price action here, we just leave it. Just leave it like that. Just leave it like that. Yeah, we can't force trades. You only take setups that are have high probability, that you've seen all of your conditions have been met. Now this one was so choppy, we can't force it. We can't force it. We can't. So we move right here where I did the marking. I think this is a setup that I found interested in during that time. So here we had a sweep of liquidity, right? Sweep of liquidity creating a stronger high, a stronger lower here, a stronger lower low. Sweep of liquidity, this one here is here. First break of structure is right here, is about around here. First break of structure. When you drop this, remember this is the 4-hour, this is the 4-hour time frame. And when you drop to lower time frame, this one becomes clear, like the 1 hour, 30 minutes, 15 minutes. You can even work with the 5 minutes. This part here will be clear for you. So sweep of liquidity, sweep of liquidity, sweep of liquidity, sweep of liquidity. First break of structure, market comes back, sweep the liquidity. First break of market comes back, sweep the liquidity right here. Then we ride. Target, ta-da, met. That was a target. We get out. Enough is enough. Enough is enough. Enough is enough. Today, I'm just going to show you examples for the few next video, just examples, before I now come to how to anticipate these setups. Then later, I will teach you about risk management for this setup, right? So we move on very well. Right here, we had a sweep of liquidity, yes? Right here, we had a sweep of liquidity. And moving up, so this sweep of liquidity is right here. We have a sweep of liquidity here, creating a stronger lower low right here. Now the market moved up, broke this guy. We created some, okay, let's delete this a bit. It will be clear. Okay. Let's say, yeah. So there is a sweep of liquidity. So this first break of structure here, we took the guy, ta-da, boom. But this was a target. This was our target. We took it here. Sweep of liquidity, first break of structure right here. This lower low here. There's one here. There's one here. Becomes our target. This here and here becomes our target. Then we ride to our target. Ta-da! right? Yeah, we had a sweep of liquidity again here. The sweep of liquidity here is here. It is right here. Now, we have the first break of structure right here. This one. This one is this one, right? Then we rallied down. We went up, right? We went up, we even took this guy. Then we came back down and swept this first break of structure lower low. It's right here. Then boom. We rode. This is the target. Met. Ta-da! Yes, that is it. It was just as simple as that. It was just as simple as that. Yes. If you have any questions, drop them down on the comments. Put a like on the video. If you don't mind, you can also subscribe and turn on the notification bell so that whenever I drop this content, so that many of us out there can get the content so that we can grow together. Yes, that is what humanity means. We'll help each other come up. This is exactly what is happening. This is exactly what is happening. Yes. I don't know whether I've delivered the message. I'm a good teacher. I know I'm trying my best, and in due time I will be good in delivery, and we'll all learn together. So the next video, I'm going to give another bearish example. Then later I'm going to give another bullish example. Several. I'm just going to give a good example so that you can get the concept very well, because I am trying to be a good teacher. Then later, I'm going to teach you how to anticipate this kind of setups. Yes, you have a market from a bigger time frame, you drop down, then it feels good, because this what I've just shown you is just on one time frame, on the 4-hour time frame only, and it is on NZUSD. And as I told you before, this setups, this model works in all class of trading assets. You can check them, or you can check all those stocks, futures, indices, Forex. Open those charts and study. Try to look for these setups, and you will be surprised. This is a secret, and thank you. I'm out of words. Thank you for watching. Bye.